Hey everyone, welcome to the Finance Current Affairs class. Welcome to the session everyone. Very good evening to all of you. Okay guys, let's start the session. The very first thing guys, the detailed video is already out yet related to the digital payment index for the month of September 2025. So the DPI stands at 516.76. This is the data of September 2025 and it has increased because of the performance and payment enablers. There are so many parameters of the DPI. You can definitely watch my detailed video on YouTube related to the DPI, plus it will be covered definitely in the RBI circular series in a very detailed manner, but the crux I am again covering in the finance current affairs session. The payment performance and payment enablers, these are the two parameters in which significant growth we have seen, and as of now the digital payment index is at 516. Earlier it used to be 493.22 and as of now it is 516.76. Okay, good evening everyone, good evening. Next one is SEBI has approved the natural gas futures contract on the NSE. So earlier we don't used to have a natural gas futures contract. What are futures contract? It is nothing but a derivative contract. It is nothing but the derivative contract, and derivative contract always derive their value from the underlying asset. What is the underlying asset here? Obviously the natural gas will be the underlying asset here, right, on which we have based certain derivative contracts. So this is a future contract. It's not like that I am buying natural gas right now. Let's suppose if I want to buy the natural gas after 3 months. If I want to buy the natural gas after 3 months, so what I can do is I can do a futures contract, right? And the expiry will be after 3 months. For those who are yet to complete the derivative chapter, right, definitely you will be able to understand this in a detailed manner once you are done with the derivative chapter. Okay, we have so many students who have just recently joined as well. So definitely once you are done with the derivative, then you will be able to understand each and every stuff of this particular news. But it's like a future kind of a contract. I need the delivery of natural gas after 3 months. So what I can do is I can just enter into a future contract or a forward contract for that purpose. Future contract is facilitated by an exchange like NSE and BSE, and here we can see that SEBI has given the approval to the natural gas future contract that can be traded on national stock exchange. So say for example I am a dealer of natural gas. Okay, I am a dealer of natural gas. Now I fear that the natural gas prices will go down in the near future. After 2 months the natural gas prices will go down, and I have a huge stock of natural gas. So what I can do is I can take a reverse position in the natural gas futures contract on the NSE. So this is how it is useful, right? And this contract will be there in the rupee denominated plus INR. It will be there in the INR currency, and this is going to definitely expand the India's commodity derivative. Natural gas is a kind of commodity, and we are launching more and more commodity based derivative contract. Like the last year we have seen the launch of electricity futures as well, and this year we can see the natural gas future contract is again will trade on NSE. Okay, so it is for the purpose of risk management. If you feel that you are having certain kind of risk, you have a large stock of natural gas, you feel that it will go down significantly, you can take a reverse position in the derivative market to protect that. Derivatives are very good with price discovery and providing the market liquidity. Acha, this news in detail you will be only able to understand once you are done with the derivative chapter, but nothing is there as of now to understand in a detailed manner. Even if you remember that yes, natural gas futures contract got the approval for being listed on national stock exchange, that will also be fine as of now. Okay, that will also be fine as of now. So collaboration with the Indian Gas Exchange NSE has actually collaborated with the Indian Gas Exchange to create a Indian natural gas futures contract. So this news was there in the month of January also, plus as of now the final approval is out. Next one can be important for the examination. RBI's major reform to strengthen the cooperative bank. So RBI here is bringing more and more reforms to strengthen the cooperative institutions, right? We do have cooperative banks. So for strengthening their financial health, for bringing more and more governance, for the operational, increasing the operational capacity and digital inclusion of the cooperative banks, Reserve Bank of India has introduced new guidelines, I will say, for cooperative bank. The very first update here is extension of the director tenure. Earlier the director can only stay in the bank up to 8 years and now it is extended to 10 years. So now more and more experienced directors can definitely participate longer in the strategic decision making. The extension of director tenure is now 10 years. Okay. The next update. RBI has also given permission to the urban cooperative banks for the branch expansion. So now new branches can be opened by the urban cooperative banks to expand the reach and get the consumer access. Earlier it was restricted and we do have certain criteria. As of now RBI has, I will say, released easy criteria for the branch expansion as well for the urban cooperative banks. Next one is the increase in the house limit, and this is going to be important. Housing loan limit increased. The cap was earlier 10%. Whatever your total loans are there, out of that only 10% you can allocate to the housing loans, and now you can allocate 25% of the total loans. Okay, this is the new capping. This is the new capping here, right? 25%. Please do remember this one. Priority sector lending credit flow is also important. Now, if a bank is giving a loan to NCDC, what is NCDC? National Cooperative Development Corporation. National Cooperative Development Corporation, and this NCDC has in turn given the same loan to the cooperative societies. Then in that case the bank will be eligible for getting the PSL classification. This will be counted in the limit of priority sector lending, right? Why? Because bank is again promoting the concept of cooperative societies. So this was an update in the priority sector lending guidelines. This we have already done in the PSL norms, right? There are certain reduced licensing fees as well. So if I talk about the digital payment, if cooperative banks are seeking the registration in the digital payments like Aadhaar enabled payment system, then reduced licensing fees will also be there. Sir, please repeat the concept of cap on housing loans. Definitely. So have a look. Let's suppose earlier the total loans and advances were 100 crore. So how much you can give loans and advances to housing as housing loans? Only up to 10%. That means 10 crore. As a cooperative bank, you can only give loans up to 10 crore specifically for the housing sector. Now, you can even give up to 25%. That means 25 crore loan you can give. So these are examples. These are the examples, right? I hope it is clear. Earlier the limit was 10% of the total loans. You have given a loan of 100 crore rupee. Out of 100 crore portfolio, 10% can be maximum in the housing side. Now 25% can be in the housing side, and this is important. Okay. Then certain other changes are also there, like Sahakar Sarthi, created as a shared service entity to deliver technology services and the common support to the rural cooperative banks. Now these rural cooperative banks are quite lacking in terms of the digital technology, right? So we have created a shared service entity, Sahakar Sarthi, that will be delivering the technology service and the common support to the rural cooperative banks as well, so that they can also get the digital capability and the operational cost can be lower. Plus consumer protection and regulatory inclusion was also there. So we have included the rural cooperative banks as well in the ombudsman coverage. So rural cooperative banks again brought under the RBI integrated ombudsman scheme. Now this news is, I think, 3-4 months back. We have discussed that RBI has included the cooperative banks as well in the ombudsman coverage. Plus deposit insurance is also there, just like a bank is having deposit insurance. If anything happens to bank, up to 5 lakh rupee, the money is insured, your money is insured up to 5 lakh rupee, and same for the purpose of cooperative banks, DICGC guarantee is again applicable up to 5 lakh rupees. DICGC guarantee will again work, right? So I have pasted the raw screenshots from the PIB as well. Later on you can refer. All the points we have already covered in the notes. Okay. Okay guys, so release of revised base year series for GDP, CPI and IIP. GDP, gross domestic product, CPI, consumer price index, and IIP, index of industrial production. Base years are going to revise for all the three. So if I talk about the GDP and IIP, the base year is going to be 2023. Earlier it was 2012, now it is 22-23. If I talk about CPI, earlier it used to be 2012 and now it is going to be 2024. So there is a change in the base year. Why? Because 2012 is quite a, it's been a while. So that's why there are so many recent changes. The entire economy changed, right? 2012 is too old. So that's why there is a base year revision in the GDP, IIP as well as the CPI. And the scheduled release will be for GDP, new series will be released on 27th of February and so on. You don't have to remember the dates. Okay. Please don't remember the dates. So definitely the new base year will reflect the current economic structure rather than the old one, right? Consumption patterns, what are the current consumption patterns, what are the production trends which are applicable right now and not in 2012. After that there was demonetization, there was GST, there was COVID crisis and so on. Multiple initiatives were taken after that, and that earlier base year is completely, I will say, obsolete. If I talk about the methodological enhancements that has been done in the base year, the revision was guided by Technical Advisory Committee or expert groups, right? So Technical Advisory Committee and expert groups were there to take care about the changes which has been incorporated in the new base year, plus the major surveys like public labor force survey, like household consumption and expenditure survey, like annual survey for of unincorporated sector enterprises. These surveys are now being taken into consideration for the computation of the new data. And as we can see, India's retail inflation is now at 2.75% for January 2026. Recently only RBI has released the, CPI data was released. So 2.75% was the data in January 2026. This is considering the new base year for CPI. What is the new base year for CPI? 2024 is the new base year for CPI. Earlier it used to be 2012, now it is 2024, right? So please do remember the data of inflation. This is the data of the new base year, right? Considering the calculation of new base year, we have seen that government has released the January retail inflation at 2.75%. So differences are there definitely. Earlier in December 2025, we were having only 1.33% of inflation. Now you guys can think that, sir, how it jumped to now 2.75%. So there is no straight short answer. Why? Because there is a base year change. If the base will change, definitely the data is going to also change, right? So it is a mere impact of the base year change basically. Here we can see in the tabular format, the CPI for the rural was 2.73. This is for the rural, and 2.77 is for the urban. It is for the urban. So urban inflation is slightly more than the rural inflation. On a combined basis, we have already discussed 2.75% will be the combined inflation. It will be the combined inflation, right? So this reflects the changes in the base year from 2012 to 2024. The current household consumption patterns, price structures, economic behavior, everything is included in the new data. If I talk about improvement, there are so many improvements, particularly in the CPI. So earlier, the number of items were 299. Now we have number of items in the series are 358. Of these items, if I talk about goods, Earlier we used to have only 259 goods included in CPI, now we have 308. Earlier, if I talk about services, we used to have only 40 services, now 50 services will be there in the series, right? And that's how there are so many changes, like there is a change in weight also. Food and beverages category. Earlier, we were having 45%, 45 plus percent, 45.86% of the weight of the total inflation which is coming from the food and beverages, right? Out of 100, 45.86% was only coming from the food and beverage category, and RBI understands that this is a huge part, but the risk concentration is there. Anything happens in the food and beverage category, it can definitely drag the inflation upwards or downwards. So the new series will only be having 36.75%. So the weight of food and beverages is now reduced, right? It is now reduced, and so many other revisions are also there. Like you can see, services and goods we have already discussed. Weight wise, we can see that earlier food and beverages, this section was 45.86%, now it is only 36.75%, and so is the change with all the rest of the categories. But I think that you need to remember the food and beverage category. Why? Because it is a major change. Okay, it is going to be a major change. So that was for CPI. If I talk about WPI, which measures the inflation at a wholesale level, right? WPI measures the inflation at a wholesale level, and we can see that it is a 10-month high data. As of now, it is 1.81% in January 2026. So abhi February chal raha hai, right? So January ka data definitely is released. So as of now, the WPI is 1.81%. This is at a wholesale level. So it is not at a company to consumer level, it is at a company to company level, right? And this is the highest in the last 10 months. It is the highest in the last 10 months, mainly driven by manufactured products, because inflation rose to 2.86% from earlier 1.82%. Now you don't have to remember these internal numbers, it will be even fine if you can just remember the driving reason. It is manufactured products. Okay, that is the major driving reason, and the secondary driving reason will be primary articles. Okay. That is also you have to remember just before your examination ka data. So whenever in whatever month your examination is there, let's suppose your examination is there on November, right? So you need to just read the last published data plus the data of the year end plus any kind of sudden change that happened in the data during the previous 6 to 7 months. You have to remember that. And no worries at all, I'll definitely tell you just before your examination, whatever session we are having, I'll be telling you the 3 types of data just 1 month in advance. Okay. Next one is a draft direction related to RBI. So RBI is mandating 60% CD ratio for the for the rural and for the semi-urban. So the branches which are there in the rural areas or in the semi-urban areas, RBI here is proposing mandating at least 60% of the credit deposit ratio. Now what is this credit deposit ratio? As the name says it all, credit deposit. Let's suppose you are getting a deposit of 100 rupees and you are giving loans and advances of 80 rupees. So can I say that your credit deposit ratio is 80%? That means whatever loans you are getting, out of that 80% you are distributing as credit. Whatever deposits you are having, out of that 80% you give as credit. Now this is a very important ratio. Is there any kind of screen blur issue? Is my audio video fine in the paid class? Let me just refresh the screen as well. So I hope now it is visible, guys. I have just refreshed it. Is it fine now? Okay, thanks for confirming. Thanks. So I was talking about the credit deposit ratio. What is credit deposit ratio? How much deposits you are taking and how much out of that deposit you are lending to the borrowers, right? That's what a business model of bank is. Whatever you are taking as deposits, again you have to lend a good amount. Voice is not coming. Okay, let me just rejoin the class. Okay, let me just rejoin the class. Just give me a minute. Is it fine now? Audio video fine? In the paid class, please quickly confirm. I hope you can hear me now. Okay, thank you. So guys, I was talking about the credit deposit ratio. So what we have to do? We have to maintain a high credit deposit ratio or a low credit deposit ratio. Now, higher CD ratio is also a problem and lower CD ratio is also a problem. Why? A higher CD ratio indicates that greater lending activity is happening, but it is definitely risky. Why? Because it may strain your liquidity. If whatever you are receiving in terms of deposits, you are lending as it is, then how you will be able to preserve the liquidity? But at the same time, if you are having a very low credit deposit ratio, it may signal a weak credit demand. If I am getting 100 rupees in my pocket and I am only able to lend 40 rupees, now that's a problem. Why? Because my business model is going to be affected. If I am able to raise 100 rupees, I have to pay interest on 100 rupees. And if I am able to only lend 40 rupees, I will be only getting interest on 40 rupees. So I am earning interest on 40 rupees and I am paying interest on 100 rupees. That's a big problem, right? But what if it is 95 by 100? Now I don't have enough liquidity. This shows that I don't have enough liquidity. So higher is also not good, lower is also not good. There should be a balanced approach. So RBI has drafted to mandate at least 60% credit deposit ratio for the rural and for the urban branches, right? Next one is very, very important for your examination. RBI increases the bank's merger and acquisition financing limit to 20% of tier 1 capital. Sir, what do you mean by mergers and acquisition? Look, I want to acquire a company. There is a company XYZ Limited. I want to acquire this company, but I don't have adequate funds. What I can do is I can just reach out to bank. I can just connect it with the bank and I can take a loan for acquisition purpose. For acquisition purpose, I can just take a loan. So earlier RBI used to restrict it. Then RBI drafted a guideline for the same, and now RBI has actually finalized that particular norm or the guideline. So RBI has now finalized the acquisition norms and commercial banks are now allowed to fund the mergers and acquisition transaction. Earlier this was not possible, but now I can take loans from commercial banks and I can acquire the companies as well, right? Earlier the RBI recommendation was just 10% of the bank's tier 1 capital. So whatever your tier 1 capital is, I'm talking about the bank, up to 10% of the tier 1 capital was allowed, that you can definitely grant loans and advances for the acquisition purpose. But now RBI has now allowed to allocate 20% of the tier 1 capital. Okay, 20% of the tier 1 capital. What is tier 1, tier 2? So these are parts of capital. Tier 1 capital is the best capital which is having the loss absorption capacity. Why? Because it is the highest quality capital. It is the highest quality capital. It is equity share capital, reserves and surplus, retained earnings and so on. It comprises of equity shareholders fund basically and other components as well, and it is a quite high quality capital. If anything is happening to the bank, this capital alone is sufficient to absorb the losses. Okay, so now 20% is the limit, very, very important for the examination. This concept can directly come in your examination for sure. Okay, highly relevant. So acquisition financing limit is increased now, plus financing as a share of deal value. Banks can fund up to 75% of the acquisition value. So I am going to buy a company XYZ Limited. Let's suppose the acquisition value is 100 crore. Now bank can fund up to 75%, that means 75 crore. Sir, but you told 20%, that is the bank's limit. That is the bank's limit. So there are two types of limit. Limit number one, which is applicable to banks. Maximum 20% of your tier 1 bank's tier 1 capital you can use for mergers and acquisition financing. But let's suppose the mergers and acquisition transaction is 100 crore. Maximum you can fund is 75%. So 75% is the limit, 75 crore rupee you can fund, right? And the minimum 25% I have to bring, obviously. I should also have a skin in the game, na? It's not like that I have taken the entire amount of loan from the bank and I have just purchased company. No, I should also bring something from my home, right? What I am bringing to the table, basically, that's the concern of RBI, and that's why only maximum up to 75% of the contract value, or I can say the acquisition value, will be funded by the banks, right? Subject to maximum 20% of their tier 1 capital. Next one, Cabinet has approved the Startup India Fund of Fund 2.0 with 10,000 crore corpus. Even if you are able to read the headline of this, that will be fine. Launch of CBDC based digital food coupon pilot under the public distribution system. Now again and again, why I focus on the blockchain technology, why I focus on stable coins, cryptocurrency related topics. Have a look what is actually happening. Government of India has actually launched a CBDC based digital food coupon pilot in Gujarat. What is CBDC? Central Bank Digital Currency. Now this is not a stupid money, this is a smart money. Why? Because it is based on blockchain technology. If it is based on blockchain technology, then we can embed smart contracts, we can include smart contracts as well in it, right? So let's suppose I want that the beneficiaries, certain beneficiaries are there. I want that they redeem the money that I am giving on the fair price shops only, on the fair price shops only. Let me just give you a quick example. I want to give you 10,000 rupees, for example. Okay, this is just an example. I am not giving 10,000 to anyone. Okay, so this is just an example. I want to give you 10,000 rupees and I want that you only buy books. You only buy books from that 10,000 rupees. Okay, but if I give you 10,000 rupee, you can buy anything. Maybe it is a book, and what not you can buy. You can buy anything with 10,000 rupees, right? So I want to have an assurance that you are buying a book only. So what I'll be doing is I'll be giving you money in CBDC, right? And I will definitely include a smart contract as well in it. Sir, how CBDC can compete with other smart contracts like ETA, Ethereum and Solana, since CBDC are pegged to INR? Okay, definitely I'll cover that as well. Okay, Shreya, just allow me 5 minutes, and once I'm done with the topic, I'll definitely answer your question. Okay, so look, I want you to buy books with that 10,000 rupees. So what I'll do is I will issue you a CBDC, but I will add certain conditions to it. What are certain conditions? You can only use this 10,000 rupees on bookstores. You can only pay this via CBDC on bookstores. Otherwise, you can't pay, because it is a programmable money, right? Smart contracts are basically programmable money, right? So here also, the beneficiaries can redeem their food grains at the fair price shop by using digital coupons, right? So that's why it is called as programmable money, and it's so important for the economy like India. Otherwise, these people won't buy food grains. These people will be buying I don't know what, right? So Programmable digital currency is an amazing concept and super duper important for your examination. That's why I always focus on topics like blockchain, stable coins and so on. Okay. And highly relevant topic for 2026 examination. I also have given this as an important topic in 2025. Only one question came in phase 1, but it will be, I think that it will be highly relevant in your 2026 examination. Definitely one question will definitely come. It can be in the descriptive, it can be in the objective as well. Okay. Now let me just address the question of Shreya. Okay. Sir, how can CBDC concept will be competing with other smart contracts, because we do have Ethereum, we do have Solana. Now CBDC is pegged to INR and Ethereum and Solana is not pegged. They are having a cryptocurrency of its own. They do have a platform as well on which smart contracts are based. So look, CBDC and cryptocurrencies are not at all comparable. The very first thing, they are not at all comparable. Why? CBDC is a e-rupee, is a digital rupee, right? Which is ultimately a fiat currency only, right? Ethereum, Solana, they are cryptocurrencies, plus they are companies who are working on smart contract and a number of things as well. I can't even compare it as well. Why? Because CBDC is a digital currency. We have pegged it to INR. The value will never fluctuate. But if I talk about Ethereum, Solana, definitely the value will fluctuate, right? So technology as a whole will be very, very helpful, and there is no need of competing with Solana and Ethereum, because here CBDC has been created to aid India, to help India in the internal matters, and we won't be, I don't think we won't be using CBDCs to kind of build contracts for the foreign nations or maybe stuff like that. I don't feel that we will be using CBDCs for that. It is just for the Indian context, right? Plus Ethereum, Solana, they are great companies which do have a worldwide acceptance, but on CBDC you can create stable things, which is not at all possible in the case of cryptocurrencies. Cryptocurrencies can be definitely restricted. Different countries still restrict them, but CBDCs are, I will say, a better way of managing the distribution channel. Even if I talk about the direct benefit transfer or the public distribution system, just like here we are distributing the food grains via the fair price shops, right? Because nobody likes a volatility wali currency. Plus the network of these companies can again be used worldwide. And that's why I say always that Bitcoin is definitely the leader in cryptocurrencies, but Ethereum, Solana, these companies are actually having that backend which enables us to make smart contracts. So they are much more valuable, but not comparable directly with the CBDC. Right? So definitely integrating CBDC in the PDS, in the public distribution system, can encourage definitely transparency. It will bring more and more efficiency in the system. The number of cases of frauds, or I will say the divergence of fund, will again be avoided. Right? So this is going to be an amazing update, plus important for the examination also. Next is RBI notifies the amended external commercial borrowing framework. What is external commercial borrowing? Now I want to start my business. For example, I can borrow money from HDFC Bank. I can even borrow money from outside India's, right? From companies outside India, or maybe from financial institutions which are outside India. That's called as a external commercial borrowing. It is a commercial borrowing, right? I am using it for a commercial purpose. So RBI has again notified the external commercial borrowing rules, and certain cost related and maturity related norms are now updated. If you want to obtain loan in foreign currency, right, then you can go for the external commercial borrowings as well. But the sole problem is you have to pay the money as well in the foreign currency. And if you have to pay the money in the foreign currency, definitely you are exposed to the forex risk. Right? Okay guys. So there are certain removal of cost restrictions. So interest rates and fee will now be completely based on the demand and supply market conditions. Earlier there used to be cost ceilings which are incorporated in the external commercial borrowing framework, and as of now RBI has completely removed those conditions and the lender and borrower can directly fix the interest rates and fees, right? And there are certain other restrictions as well which are now relaxed, like maturity norms related restrictions, expansion of eligibility of borrowers and lenders. Now more and more people are eligible to take the external commercial borrowings. The end use classification has also changed, but we'll be covering this particular circular in a detailed manner in the RBI circular series, okay, not in the finance current affairs series. Next one, NPCI rolls out UPI One World Wallet, UPI One World Wallet for the foreign visitors at India in the AI Impact Summit 2026. So now this particular wallet will enable the foreign nationals. Let's suppose I am from UK, I came to India. I can even transact in Indian rupees without needing an Indian bank account. So I don't have to open an Indian bank account, but I can easily transact in Indian rupee by this wallet, okay, by this wallet. So this is an amazing initiative, and this will be definitely organized by a prepaid payment instrument. First you have to buy INR on that particular application, and then you can use that INR for payment purpose in India, and this is for the foreign nationals coming to India. Acha, what is prepaid payment instrument? Have you guys used MobiKwik or Paytm? I'm not talking about UPI. So first you have to add that money in your wallet, and then you can use that money from that wallet. So it is a kind of prepaid payment instrument. First you need to prepay it, and then you can use that payment instrument, right? Then you can use that payment instrument. So this is also going to be an amazing initiative, and it is now applicable over to 40 countries. So definitely we are moving towards the internationalization as well as the nationalization of the INR, okay? And soon UPI will be also accepted in Malaysia after the NPCI International and PayNet Pact. So PayNet and NPCI International have signed an agreement, and soon UPI will also be enabled in Malaysia, right? So you can definitely pay the merchants which are there in the Malaysia via UPI as well. This is a great initiative again. One initiative was, if the foreign citizens are coming in India, foreign nationals are coming in India, let them use your INR. The second thing is, if somebody from India is going to Malaysia or different countries, then also let them use their UPI in the international countries as well. So both the initiatives are amazing, and plus now we have an extra dose session. So this you guys will be doing, right, as a homework. What you have to do is you just have to download this PDF and just give it a quick reading whenever you are free. So it's not a compulsion that you have to do today only. So this is a part of extra finance current affairs that I give, right? Later on, please do download this PPT and quickly read the rest of the news, okay? So thank you so much guys. See you soon in the next class. Take care. Have a great evening.